JBlog 2009 June 20th. Once again starting with the S&P 500 index. I think the important thing to look at here is once again this trend line. The original trend line was broken in May. This particular trend line, we have one touch, two, three, four, a little bit of a violation here, four. Then it went underneath. It came up a little bit above, but it didn't make it above for long. And then the trend line, which used to be support, became resistance. And ever since then, it's been dropping down here. And the last 3 days have been up, but definitely not very strong. Friday was a dodgy. Friday was option expiry, and option expiry is not very telling usually. We don't have a 1030 crossover here yet, so the market is definitely still in a bullish configuration for the time being. I cannot give it a bear flag for the time being because the red is still over the green. Once there's a crossover here, then it'll officially be a bear market in my books. So that's basically what happened in the S&P on Friday and this last week. Looking at oil, oil has had a bit of a drop on Friday. It went and closed below 70, just slightly at 70 actually, very close to at 70. So that's starting to show some weakness in the oils here, but definitely not quite the fall that I expected. I expected it to fall a little bit faster. On the other hand, we do have declining tops here, and if it continues going along this trend, it could very well be that we're going to retest the lows of the middle of April, and perhaps even retest the lows in February. Basically, again, like I said before, there's a whole bunch of traders that were buying oil at today's price and then selling the futures, physically buying the oil today at a cheaper price and selling the futures, and not just storing that oil on tankers. And tanker space was very cheap. Tanker space, obviously demand and supply will dictate that tanker space becomes more expensive, and as the futures started narrowing towards the present price of oil, that trade was no longer profitable, and all of that oil that was stored in those tankers is now starting to hit the market, which is of course going to have a negative effect. Natural gas is not making a new high since this particular high here, but it has broken the last high here, so we'll have to take a look at where that will go next. One thing that I find interesting is gasoline has dropped 20 cents in the last week. It was going very high there for a while, and it has dropped back. Copper again is starting to show some weakness. None of these things have a bearish bearish chart configuration on them yet. They're still in a bullish trend. The red is still over the green, which means the 10-day exponential moving average is still above the 30. So I cannot call it a bear market quite yet, but it's definitely a weak bull if it is indeed a bull. New York Stock Exchange is a little bit stronger, was a little bit stronger than the S&P 500. Probably some movement in the small stocks. But again, this is not a very strong pattern. So for the time being, I don't really see anything that's making me particularly bullish. I continue to increase my short positions. I continue to sell off my long positions, or taking offsetting option hedges against them. Now, one thing that it had made me a tiny little bit upset was AGU. AGU had a huge drop that was brought about by some bad news from potash actually, and so AGU dropped from 53 to 51 all the way down to 41. That is a significant drop here. I'm not particularly happy about that. I don't think that was quite deserved, but the market's king and the market says down, so down the stock went. So I was able to profit on the options that I had sold against this, and that partially makes up for what I lost in the drop, in the stock dropping from 51 down to 40. And now I'll be sitting on the stock a little while, and I'll be waiting for the next option premium to be somewhere around the $2 mark, and I'll be selling those calls yet again as a covered call. Simplest of all the option strategies. I continue holding AGU. It's one of the few stocks that I do hold more on a medium to longer term basis for the time being. Outside of that, let's have a little look at currencies. Currencies here. Australian dollar is starting to make lower highs. That means that we could see a pullback in commodities, in base metals mainly. We have the the stochastics starting to put in lower highs. It's a non-confirmation here, so even though the currency itself has made higher highs, or at least made a double top, the RSI up here as well as the stochastics has not reflected that same strength. So from a technical point of view, it's not the same strength. British pound looks much the same. The Canadian dollar has, I wouldn't say dropped off the edge, but it's certainly not a strong currency anymore. It dropped from 92 to 89, which makes my life a little more expensive, unfortunately, but such is life. Makes Canadian exports more attractive. And that again, Canadian dollar is very much linked to the price of oil. So for the Canadian dollar to go down, there must be an expectation that oil could very well go down as well. Again, it goes into my shorting oil at this point and waiting for pullback. The only thing I wanted to look at here is where is it? The US dollar. The US dollar has slowly increased in the US dollar index, slowly increased in comparison to other currencies, which means that people are once again getting cautious. They're trading into the US dollar and out of other assets, because the US dollar is the only thing that can basically take those other assets, that has the type of liquidity that can absorb all of that wealth. Outside of that, nothing much else has happened. As I said, I see some weakness. I continue to increase my short positions, and I'm not buying anything long. I just do not feel that I want to be very long at this point. So that's all for this week. I hope you have a good week trading and make lots of money. And now you know what I'm doing. Have a good day.